The AMC stock recovery is in full effect, but how high can it really go? Can it go to $1,000 per share? Let's talk about that. I got a great video for you today. Starting with some bullish sentiment here. We're all on the same team, AMC and GameStop holders. It's not mutually exclusive. Here's a quick bar chart about the United States streaming market share. So in red here is going to be from the year 2020, and black is going to be from 2021. And on the left hand side, well, these older services that have been around for a while, like Netflix, Amazon Prime Video, Hulu, Disney Plus, Apple TV, those have actually decreased throughout the year. Now, the newer ones, Peacock, HBO, Paramount Plus, and other streaming services have actually increased over the year 2021. And AMC is going to be wrapped within these other streaming services here. They do. So I'm on the AMC Theaters website now. All I did was click on demand up here, where you can sign up for the streaming services. There's some quick due diligence. So for the top rentals right now, these are all new movies. Years 2021, 2020, 21, 20, 21, 20. So these are fresh releases, and they are focusing more on the hot blockbusters that are coming out later this year. Going back to the $1,000 share price, well, do a quick calculation on that now. Let's be conservative to begin. Let's pretend the share price were to go to $50 a share. How about that? That's a reasonable target for long term. From $10 to $50 on AMC. The old all-time high was $35. So if I take $50 target divided by the current share price, 10, it's going to be a 5 times multiple. Okay? Well, the current market cap of AMC is going to be $5 billion. $5 billion times the multiple of 5 is going to put us at a $25 billion market cap for an entertainment company. That's somewhat reasonable. That's achievable. It can hit that. It could hit $50 billion for that matter. So the $50 to $100 range is very much within reach. That is a strong possibility. Now, going back to $1,000, well, the rumors are it could go even higher. Let's say $2,000. So same calculation here for $2,000 per share, and divide it by the current share price. Going to give us a multiple of 200. Okay, $5 billion market cap times the multiple. It's going to give us a $1 trillion market cap. $1 trillion is out of reach for an entertainment company at this point. Perhaps someday. It's got a long ways to go. Let's hit that $100 target first. Great. Jumping into the charts. Glad to clear that up. So here's our parallel ascending channel, and I'm going to keep it parallel. I am just going to adjust it slightly and move it down lower just a little bit here. If I do that, well, the price action still lines up perfectly, and it's acting as support. The bulls are looking for this area to hold as support around $9.10. So the short-term target will be up here, short to mid-term, okay? Not for day traders, for swing traders. It's going to be around $20, but we do have higher targets on the chart here. If I go out to the weekly chart, the old all-time high, it's up here at $35. This is our long-term target right now on the chart. Not according to hype or rumors or speculation. Okay, there's a technical target on the chart. And to reach that target from this point, it's going to be over a 250% move to the green side. Zooming into the day trading chart now. It actually did close on Monday just above some moving averages here. That's a good sign for the short term. It's a bullish signal. It's looking to continue. The old $10 psychological resistance has been smashed through. It was broken through the other day. That's no longer a strong resistance line. So when the price does eventually return back up to the $10 test, I expect it to continue beyond $10. I don't think it's going to act as a strong resistance anymore. Hopefully it'll turn into support. So we're looking for AMC to hold above $10 and push higher over the end of the month. GME is in a different situation. It's been restricted within this gigantic falling wedge for quite some time. It's been trending down. It's an undeniable fact, unfortunately. That's just what the cycle is doing right now. And to stay ahead of that cycle, to keep you one step ahead of the markets, we are looking for continued retracement as low as underneath $100. It can come way down here below all of this support lines until it really finds a nice bottom and then breaks out from this wedge pattern. That may not be until closer to this earnings report coming up on GameStop at May 27th. We have a little time until that approaches, so there's a strong likelihood it is going to continue trending down going towards this earnings report until just before, perhaps a couple weeks before it, where it'll be back down into this buy box, and then it may break out or bounce right before the earnings, or potentially right afterwards even. So it is a very important date to keep on the radar, May 27th for GameStop. Not many people are talking about that. They're still talking about the old earnings on March 23rd. That's well and done with. It's time to start thinking about the future. So until we see a strong breakout confirmation here, we have no entry signal for a long swing trade. Here's the NAKD chart. Keep things a little short and sweet today. So it's very, very low. It's looking to be finding a bottom in this consolidation area from back here. If I extend that all the way out, it becomes a buy box. This is the buy box on NAKD. It's in there. It touched there. It's not in there anymore. It bounced out. This appears to be finding a bottom here. I'm glad some people were able to enter at this low here, way down, 45-cent area. Yeah, it has had a strong bounce from there. It's pushed back up above this trend line. It's now acting as support. We're looking for this to continue from here on NAKD. That bullish divergence really played out on the chart the other day. We also saw that on CTRM here. So this Castor Maritime has also been looking to find a bottom. It's right at its buy box. Not only that, it broke out from this trend line here. The end of the day on Monday, closed way above. It may come down and retest it just slightly. And then we're looking for continuation there as well. The markets are getting exciting again. People are starting to see some green in their portfolios. Now, for CCIV Bay, interestingly enough, I've had this purple line on the chart for a while. This is one of the older charts here. And that's where the price is currently sitting, just above it here as support. So there's a long-term support line that's holding right now. Somehow it's perfectly down where this green projection was. I thought it would have went this low back here. It didn't. It's now that low currently. So the actual magnitude of this move actually played out perfectly. It's just very difficult to time something like that. So we don't really know the exact timing of those type of moves. We're just going for the direction. Essentially, is it going up? Is it going down? Is it going to keep going up? Is it going to keep going down? And that's what this projection is telling us here. So based upon this, the next target's going to be way up here, closer to $30. Short-term target on CCIV long. I think this is going to play out to be a bear trap, particularly if it holds this line as support. Then this is going to look really nice. But be careful, you don't want to be super over leveraged here, just in case things got rough. Alright. Lastly, for CCIV, if I zoom way in to just the last day or two of price action here, it's trending down on the lows, right? Well, if I go to the RSI for that time length, it's trending up. That's going to be bullish divergence on the 1 hour chart, CCIV, right here, right where it's sitting. Remember what happened with NAKD when we saw that in CTRM. See it on CCIV right here, right now. It's not very prominent. It's only a short time frame, but it is there, technically speaking. So for IDEX, I do want to keep charting this somewhat as time goes on here. Perhaps we can make some sort of support trend line from this long term right here, like so. I'm barely even moving it, guys. And that's holding up currently. Actually, not only that, it appears it bounced from there, and our purple horizontal support line as well. This may be a bottom here too on IDEX. If it's not, it appears to at least be a temporary bottom, and should see some kind of support being found here at the top of this buy box area in the long-term trend line. We're waiting for a breakout of this upper resistance here. Nonetheless, it's very oversold on the RSI. This is a 2 hour RSI, it's way down here. Even the 4 hours pretty low. So continuing with the divergence, I've been trying very hard to identify divergences as soon as possible on these charts now that they're dipping so much and appearing to be looking for a bottom. Many people are looking for entries. There's a lot of bulls in the market still, just waiting patiently for some kind of confirmation. Well, maybe we have some here on IDEX because there is bullish divergence here. So I'm going to go to the 2 hour chart. And I'm going to have to zoom very far, very close to see this. It's tough to spot things like this. That's why I'm showing you. A lot of people are going to miss this. Alright, so from these lows, ignoring this middle one, that adds to the difficulty here of identifying this. But ignoring this middle one here, taking these two, where it's a low and then a lower low, and going to the RSI for the same point in time. It's down here and down here. Well, it's tough to see, but if I scale it up, make a trend line, it is there on the chart where it's actually a low and then a higher low on the RSI. So that's trending up. The price action's trending down. On the lows, that's going to be classic bullish divergence right here on IDEX. On the 2-hour chart, more significant than the 1-hour chart. However, for PLTR, the bearish case continues at the moment. A few members are eyeing this asset as well, so let's chart it a little bit. There's divergence here. It's not in favor of the bulls. So what I spotted on the Palantir chart, instead of bullish divergence, there's actually bearish divergence. Not only that, it's hidden bearish divergence. That's going to be from these points here, these highs, trending down, and then going to the RSI. That's going to be this area here and this area here. Zooming in so you can see it easy. We have an uptrend there, downtrend here. That's going to be hidden bearish divergence. This is looking to potentially continue lower here, all the way down to a low of at least $20, potentially lower into this buy box area down at 1850. It can even go lower than that if things got bad. So be careful on Palantir here until we see some kind of confirmation, some kind of bullish signals coming through on the chart. Right now it hasn't done that. So that hidden bearish divergence may continue to play out here and push it lower. If I zoom way into the day trading chart, there's also a strong resistance right now, right here, just above the price where it's sitting right now. So be very careful. So until it breaks above here, there's no kind of bullish signals being put on this chart. It has to get back up in this area to about 2250 and hold as support. It may come up and bounce and get rejected right off there and keep going down. So it's risky right now for day trading. Great stuff. Hope you enjoyed the video. I'll be live tomorrow morning, Wednesday, 9 o'clock a.m. Eastern. Hope to see you there. Have a great day. Happy trading.